Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you guys are looking for undervalued investment opportunities, click subscribe. Give me the thumbs up button if you like the content. I'm going over North Star and bad charts. I've been following Patrick Karam for a while on YouTube. What I do is I chart things out, and then I kind of bounce some of his charts, not necessarily against my charts, but his ideas and charting against my ideas and my charts. And then I try to back test and see if I'm getting people to basically replicate what I have. I also do this with Michael Oliver as well. So I'm looking at these guys, I'm looking at mine, and I'm seeing similarities. They also do analysis very close to what I do in terms of ratios. So I look at asset relative values against each other. They do the same thing. And then what they do, which is the same thing that I do, is they look for leading indicators and signals. And then they say, okay, if this ratio starts to turn, it means that at any moment now, we're going to see price movements and outperformance of that asset that's turned. It's the same thing that I do. So I was looking at some of their charts. I haven't signed up for this website yet, but they do share some of the things that they go over on their website. Their website is northstarbadcharts.com if you want to visit it. I did take a couple of their charts and throw it in a presentation just to go over some things with everybody on the channel. It basically aligns 100% with what I've been talking about on the channel. So let's go into the presentation I threw together here on some of the charts that they had. And honestly, I think these are really good charts. So they did a platinum to silver ratio. We know on our analysis that platinum is the cheapest on a ratio basis. And what he's showing here is the ratio basically with a trend line going down. And here's a trend line here of the last breakout. So platinum, when it goes up, is outperforming silver. And then you get these long consolidation periods where silver outperforms platinum. Right now, platinum is extremely cheap on a ratio basis. We know this. It's around 35-ish, 40-ish, somewhere in that range. And what he's saying is, I'll be more bullish platinum than silver when it breaks above this trend line, which means that platinum is outperforming silver. That's what that ratio is saying. And right now, but looking at the distance from the 3-year moving average, you can kind of see where this is coming. We're coming on up, trying to break above this downtrend line. Once it breaks through here and platinum starts to outperform silver, that's how you gain more ounces of silver, of whatever the denominator is. And that's how you increase your wealth. I think that trading physical precious metals and swapping them between each other is one of the best ways to increase your ounces in your possession with the lowest risk possible. And this right here is just showing you how cheap platinum is in relationship to silver and how the ratio is interacting with each other. And once this ratio breaks, and I think it'll break to the upside at some point, you'll probably see platinum in a mid-commodity cycle outperform silver. And then at more towards the mid to end portion of the commodity cycle, that's when silver is gonna hit the gas and really take off. Now, it's hard to speculate on some of this stuff on underperformance, outperformance. The way I'm playing it is I'm owning platinum and silver because those are the two cheapest precious metals. Silver is more of a monetary metal than platinum is, but platinum also has a whole bunch of industrial uses, which I think its industrial uses are going to ramp up quite substantially if we were to go into a hydrogen type of economy. But this is what the chart looks like, and they did an excellent job of presenting this and looking at this data. Now here's platinum again. This is platinum's structural momentum, defined bull era. We got the paradigm shift. These are just trend lines that are breaking. It already broke to the upside, and we're back testing. On the right-hand side here, he puts in these black lines, which is volume. Volume gives you support when you're above it. So if you're above it and you're coming back, the volume's going to support you right underneath. We're right about there where the volume's at. So I think we're probably going to see a move higher at any point here. We've got the bull box, blow off top. We got the bull box going over here. We got the bull market support line, and then we got the breakout line. And we've already broke to the upside of that breakout line. And last bull market, we did a 220% move in 98 months. And then we had the blow off top, which was a 75% move on top of the 220 in an extra 6 months after the 98-month bull run. So that looks, this chart is a pretty good chart. I like how they're depicting this. Now here's platinum versus the Dow ratio chart. This is a roadmap for commodities to outperform US equities. The platinum to stock ratio, whatever platinum's outperforming, it means that commodities are going to outperform. It is one of the things that you look at. You want to look at the copper to Dow ratio, or copper to S&P 500, or platinum to Dow, platinum to S&P 500. Both of those ratios, when they're breaking to the correct side where platinum or copper outperform, it means that we're in a commodity bull market. And right now we got the paradigm shift breakout line, basically the big long downtrend line that is going to break at some point and be a huge bull. But right now we are down really, really low, doing this basically bottom here and another 2 bottoms, and then probably a move on up. So that's something that I'm looking for, pretty excited about. And right now, platinum is extremely cheap. So that's one that in relationship to Dow, it's going to increase its purchasing power quite dramatically with a ratio as low as it is. And if it were to go to 0.2, I don't know what the multiple is, but it's going to be many multiples increases against the Dow. Platinum is. And they've got they got the projections here. They've got mid-cycle here is about 2024, and then the end of it is about 2027, and that's about right. Because I usually say about 5 to 10 years. If we go from 2020, that's 2025 to 2030. That's about right for a cycle. Here we've got oil. This is weekly linear oil chart. We've got this kind of reverse shoulder, head, and shoulder that developed. We got a paradigm shift. So we got the trend line. We broke this downward trend line to the upside. They call this a bullish transition zone. The breakout line's $74 if you go across here. And then we could potentially move to a $105 target. If you look at the symmetry of how this fell, it could go up very quick to $105. He's saying maybe late 2021, early 2022, the ascent will be violent and we'll see a nice spike higher. Then we've got the falling wedge target, which is this falling wedge here. This distance here put on top is about $145 price target for oil. He didn't put a time frame on it, but I'm sure that's probably some time frame, somewhere in here is my guess. So that's also there. I agree with this chart. It follows the analysis that I do. He also does reverse symmetry a lot, just like I do, where you got resistance, support or resistance coming down or going up and doing the reverse symmetry. Here is the 30-year real yields. So this is U.S. Treasury 30-year. Real yields are falling, which means that the inflation rate is greater than the interest rate. And he's projecting this to continue to fall, which I also would project. And it means that it's bullish for precious metals and commodities and anyone who's a debt holder. So inflation will be greater than the interest rate on the 30-year. And he's projecting that we're going to hit somewhere down here by Q4 2022. Now here is the uranium spot price. I'm trying to hit every major area that we follow on the channel. We put an arc in here. This is the spot price of uranium. We're in this kind of uptrend going up. We broke this flag pattern type deal to the upside, and the projected moves about approximately 39 before we hit the top of this trend line. It says to get this party started, we really need to see a breakout above this trend line channel. But we broke out of this small one, and we're gonna next try to break out of this big guy at $39. That's the one to watch. Here is gold's weekly historical log chart. What it's saying is every time we've had a 91% move, it's been followed by a massive move behind it. We've got this 91% move with real estate where it's at. I think we're going to see this thing break and move way on higher in an expansion phase of real estate, which is inflationary. And that's what gold does. We had an expansion phase of real estate from 70 to 74, 73, somewhere in there. 73, I think. Then it had a little cool off period, and then we had another expansion phase of real estate. Another expansion phase of real estate happened from 2099 all the way to 2006 or 7, somewhere in here. Then we had the blow off. They always do these blow off tops at the ends because the money, it takes time for the money to go into the system from an expansion phase of real estate. So gold and silver and platinum are always lagged, and commodities. Inflation lags the M2 money supply. So I expect this to go up quite substantially, just like they're looking for as well. Here are 2 arcs and 2 trend lines is all you need. This is silver, the actual price of silver. We've had this nice big kind of upward channel going on here. If you look at this kind of zone that they've got, by 2028, they're expecting silver to be between $100 and $200. But the target zone could be anywhere from, if you're looking at 2028, it could be anywhere from $30-something all the way up to $800. So it's a very large target area. But I would agree with this. It's about the right time frame. Looks really good. Now for GDX, I know we've got a lot of GDX ETF holders. You can kind of look at this as the whole mining complex. We're putting in this, what they might think is a cup and handle pattern, potentially. Obviously, that's a huge guess, but they're looking at early 2023 for the miners, GDX, to get up to a $65-ish target zone. We could potentially go to 25, 26 if we were to come down and hit this bigger arc. In late 2023, 2024, we could potentially put a handle in here, or flag pattern, however you want to say this, but it's going to be a big cup and handle potential, and then move on from there. And we're in this uptrend down here for the TRIX, still trending up on the weekly chart. I can't remember what that necessarily is, but it's moving on up, and this chart looks pretty good. So I just wanted to kind of go over that, give these guys kind of a shout out because they're doing a pretty good job. A lot of the analysis and what they're looking for is exactly what I'm looking for. Dollar weakness, commodity boom, precious metals going higher. And what I've derived it from is all from real estate and the expansion phase of real estate. That's the driver of these charts, the fundamentals to explain why it's behind it. So that's awesome that they do these charts. Go check out their website, badcharts.com. I'm not in any way affiliated with them. I just think that their charts are very they've got a whole bunch of information. They are correct, and I agree with the charting that they're doing. So guys, if you want to check them out, go for it. And if you guys like this content, give me a thumbs up. And thank you for listening. This is Finding Value.